Okay, we have a market that is digesting a whole host of profit stories. We have been knee-deep in earnings this week. At least it gives us a sense on how companies are navigating all the headlines we talk about day in, day out. Let's get some more perspective. Julien Nono-Womdim, VP of Equity Analysis at Goodreid Investment Counsel, joining us here in studio. Nice to see you.
Likewise.
These are kind of these moments where I know BNN Bloomberg, we get all hot and bothered about earnings reports. It's just one set of numbers in a company's history. But at a time when the macro stories are so confusing, it is good to know what businesses have been saying. Overall, have you felt encouraged by what companies are saying? Is it just kind of mixed company by company these days? What's your sense?
No, I think you're right. Earnings are a point in time, and ultimately what we care about is the trend. As it pertains to the market, the trend has been positive. Equities are still at all-time highs. I think there are two contrasting dynamics. In the near term, earnings, a bit around 50% of S&P 500 companies have reported. Earnings for this quarter are tracking at around 8 to 10% growth. But we've seen a bifurcation. Companies have pointed to very strong results, have been rewarded by the market. You've seen Meta, you've seen other names in the technology space and in industrials, as we've talked about in the past.
Yeah.
And in contrast, companies that are a bit more sensitive to macro or the broader economy are suffering. The second dynamic is that medium to longer term, we have to recognize that since October, November of 2022, the markets have effectively been going higher. Yes, there's been some volatility along the way, but generally speaking, it's been good, and it's been good because the U.S. economy has been resilient. We're now starting to get mixed data points, and last week we saw it on the labor front with some negative revisions. And so I think the labor market, the consumer are points of concern. And some companies are exposed to them and some companies are not.
It's like we've been driving, maybe we're low on gas, we pull over, we kick the tires, see how the car is performing after, we've been driving a long distance. Okay, so let's go into some different examples. I just went through a flood of Canadian earnings stories that we've been tracking this morning. But,
yes.
Let's go with restaurant brands, only because people have been trying to gauge the health of the consumer. You had
Yes.
McDonald's outperform this week. This company, which is the parent of Tim Hortons, Burger King, is down a bit this morning.
Yes.
Was there anything you could see in the performance that provided you insight on the investment thesis here?
I mean, yeah, they reported this morning. We do not own it. We're on the sidelines on this one. And I think the reason is twofold. First, if we take the broader restaurant industry, that's an industry that is ultimately going to be driven by consumer spending and consumer sentiment. And the second piece is on QSR. More specifically, 2.5 years ago, they brought in Patrick Doyle, the former CEO of Domino's.
Which had an incredible run at Domino's, too. Yeah.
Absolutely,
Yeah.
yes. And so there was this sense from the market that he would be able to help revive the franchise across the different businesses. And so far, 2.5 years later, I'd say that the record has been mixed. It's been mixed on its international execution. So expanding internationally in China and elsewhere. And it's been mixed in terms of expense control, as we've seen this quarter. Going back to the point-in-time analogy, the trend at restaurant brands has been sort of rather tepid. And every incremental point that we get is not pointing to a change in trend as seen this morning.
All right. Now, let's compare that to, I remember Chipotle came out with their numbers in
Yes.
the last couple of days.
Yes.
That was a more dramatic decline.
Yes.
Speaking of companies with sort of, star management, their
Yes.
former CEO went over to Starbucks to try to rescue the coffee chain. I don't know if that left a big hole there, but investors were pretty concerned about Chipotle's performance. I mean, it's the same thing, like consumers, just too much concentration in an uncertain consumer environment, or what?
They're suffering different drivers in terms of the stocks. So
Okay.
Chipotle was historically viewed as a high-performing restaurant, and the same-store sales there were very, very strong. And so there's this sense by the market, as reflected by its valuation pre-earnings, north of 30 times earnings, that the company could withstand any sort of consumer pressure. the reality is they've now reached a scale where the state of the consumer matters more. That's number one. And I think number two, more importantly, is that the consumer is in fact being more selective. And so same-store sales growth, they lowered their guidance for the year, pointing to macro uncertainty and consumer behavior. And so the market is having to now readjust its view as it pertains to the long-term growth prospects of the company and whether or not they can execute their way out of what seems to be a changing consumer ecosystem.
Okay, so we're doing like some play-by-play analysis of the industry,
Yeah.
but I want to bring it home to when you guys ultimately decide on an investment in an area where there are some companies that are navigating perhaps choppier waters. One company that you do like,
Yes,
as an investor, it's called Brinker. Maybe not as much as a household name as Chipotle or even restaurant brands as brands. Tell us a little bit more about this one, which has a nice long-term chart.
Well, to your point, when you're in an industry that is sort of undergoing headwinds, you want to find companies that have very specific and quantifiable idiosyncratic drivers. In the case of Brinker, ticker EAT, which we own, they brought in a CEO about 2.5, 3 years ago, Kevin Hochman, who was at Pizza Hut previously, very tenured and well-respected. And through his leadership, the company has been able to improve its same-store sales growth and improve its operations. They sit in an interesting pocket, which the other two companies have actually called out, which is the consumer seeking value. So their main franchise, Chili's, is a casual restaurant that offers value.
Yep.
And so that has been what has allowed the company to do well in terms of its execution. And so despite the industry headwinds, we think Brinker, through its value offerings, is able to attract and retain consumers.
All right. Great perspective of the industry. It's nice to have you back with us, Julien. Appreciate your time.
Thank you.
Julien Nono-Womdim joining us, Vice President of Equity Analysis at Goodreid Investment Counsel.